Today on the Blockchain Report, Bitcoin's at 118K and the hopium is strong. Sailors flashing the bat signal again, likely prepping for another billion-dollar buy. Bitwise's CIO Matt Hogan says 2026 is the real bull year because cycles are apparently optional now. And Elon's AI Grok says Bitcoin's going to $25 million in 2046. All this and so much more on today's show. Let's go! Good morning, my sat stackers, blockchain bandits, and everyone still swiping through CoinGecko like it's a dating app for tokens. I'm Hank Hudson coming to you live from San Francisco, where the sidewalks are optional, the taxes are not, and your barista probably trades altcoins between pour-overs. It's Monday. Wall Street's waking up. Crypto Twitter's already mid-mental breakdown, and Bitcoin, well, Bitcoin's been eyeing a breakout like it's waiting for Jerome Powell to whisper sweet nothings about rate cuts. Meanwhile, altcoins are out here behaving like emotionally unstable roommates. One's mooning, another's rugging, and one is trying to summon Moloch with a ChatGPT script. So before we dive headfirst into the madness, do me a solid, smash that like button like you're Serena hitting it overhead at Wimbledon, and follow RoxomTV and yours truly, Hank at RoxomTV, on whatever app hasn't been sued, hacked, or turned into a dating site for VCs. Whether you're watching from your home, your office, or a bunker labeled Sovereign Citadel, let's kick this week off right. But first, let's check the pulse of the market in this morning's Market Rundown. Let's go. All right, it's Monday morning. Let's see how the market gods are treating us today. Things are looking okay. Nothing crazy right now. We're doing okay. Everybody take a big breath. It's all going to be just fine. Right now, Bitcoin is hovering right above 118K. We have Ethereum right beneath that $3,800 mark. Is it going to eclipse 4,000 to maybe some new price discovery action? We'll see as the day continues. XRP hanging out around 316, 317 a pop. Cardano at 80 cents, and Dogecoin bringing up the rear at about 23 cents a coin. In TradFi, the stock market is looking bleh, not a lot going on here either. Pretty boring this morning. Right now, the Dow Jones is standing pat around $44,900-ish. Not a lot of movement there. The NASDAQ, same story. Hanging out around $21,170. Not a lot going on. The S&P 5 standing pat around $6,400. MicroStrategy up a measly $2 this morning. Michael Saylor, he's fine with it. Not a lot of news to report. Coinbase is down 3.5% today, right around 377. Tesla, they're up a nice percentage, about almost 3.5% this morning, sitting around 327 a pop. Nvidia is up $1.45 this morning, and GameStop still kind of hanging out in the doldrums around $23 a share. We're going to take a break, but when we're back, Blockchain Report, a lot to come up today. We'll see you in just a sec.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Oh, it's beautiful, Hank. This is not financial advice.
All right, welcome back. This morning we are joined by none other than our resident shark, and crypto wunderkind, Luca Pagano. Luca, welcome back. We are excited to have you to help us figure out what's going on the charts this morning. How are you on this Monday?
Hey, Hank. It's a pleasure to be here as always. So thank you for having me. And yeah, I mean, pretty exciting times for Bitcoin. So happy to be here.
Indeed, indeed. So right now, Bitcoin hovering above that 118K mark. Ethereum sitting right above 3,800. Obviously, the Bitcoin Treasury strategy plays has been a lot of the talk recently, but now we're seeing a lot of Ethereum Treasury plays kind of come to the light, and Ethereum's price is seemingly following that narrative. What are you seeing right now? Let's start with Ethereum in the charts. What's going on there? Are we heading for a new breakout above 4,000 soon? I know the past high is about 4,800, but there's a lot of action going on after some pretty slow months for the ETH crowd. Where are you seeing it?
Yeah, I mean, I'm very happy, honestly, for the Ethereum vibe, you know, because a couple of weeks ago, everyone was like, Ethereum is trash, you know. We were hoping to see a bottom, and here it is. So very glad to see that, you know, in action. In terms of ETH, you know, I love to analyze it in terms of BTC and in terms of USDT, because I think, you know, what's important is, let's first go to FBTC to see like how is it relative going, you know, and then we can grasp a little bit on how is it going overall. So as a quick recap, you know, if we see the weekly chart just very quickly, we've seen this clear bottoming on the 17-18 cents basically, which was beautiful, and we very quickly turned around. You know, as I love to say, Hank, the best turnarounds are like a V-shaped, because they leave too many people out. So that's what that's why you get these fast prices, because people are chasing it. You know, so that's beautiful to see. I think now we got to a new point here where we were expecting maybe to get up to the 34 cents, which is for me a big resistance in FBTC. So maybe we get there right now, or maybe we just rest a little bit here and then we get there. For me, it's the same, because for me the play is still FBTC in terms of BTC. You know, for me the target is still 34 cents. If we go and see very quickly, Victor, ETHUSDT, you know, we in the weekly charts, we're getting to the high range, you know, and for me this is a very important area, honestly, for Ethereum. I mean, clearly we've seen this go from bottom range to top range, so it's honestly beautiful to see. If we see this very quickly, hang together, this was a movement of 155%. So this is honestly beautiful for the Ethereum people. Now it's a little bit of a time to be more cautious. If we run up to the daily, I think we're seeing resistance come in here. So I expect, honestly, probably maybe one more push. But for me, rest is assured, you know, in the coming weeks for the Ethereum people looking into breaking the famous 4K, you know.
Yeah. And with seeing this recent surge with Ethereum, it has surged something like 60 or 70%, I think, in the last month. And we've seen Bitcoin reach these new all-time highs a few weeks ago of about 123. What is the Bitcoin overall dominance looking like in the market right now? And what is it telling you? Are we finally about to see that altcoin season that everybody was waiting for? Are people starting to shave off profits from the top of that frothy BTC price and put it in Ethereum plays? Or what are the charts telling you right now?
Yeah, that's a beautiful, you know, topic, because we've been, you know, this whole year betting for BTC dominance. I think we're seeing something pretty cool right now. Looking at, you know, the Bitcoin dominance chart very quickly, because I think what happened last week, not the other, like 14th of July, was a very important week with a red candle that said, hey, maybe altcoins are here to run a little bit. You know, we've seen it with Ethereum, we've seen it with Solana, and I hope to keep on seeing it, honestly. That's why I said, for me, FBTC is still a bet in place, you know. What we should have here as a plan, or at least, this is of course not financial advice, but at least what's my plan here, Hank, is if we keep below the basically 63% levels, for me, we're at altcoin movements right now, expecting some altcoin season, chilling a little bit on the Bitcoin side, up to 56, let's hope. So that's at least my plan. I would start to be cautious here, Hank, and paying much more attention in the BTC side than the altcoins if we can reclaim the 63% of Bitcoin dominance zone. That's at least my view.
Mm-hmm. Got it. And let me ask you this. So we're at this place, we've seen a little bit of decrease in Bitcoin's overall dominance. We're entering the month of August here in just a couple of days. Traditionally, August has been a not so great month for Bitcoin. I think it's only been up like 2 or 3 times in the month of August ever. Is that factoring in at all to your price predictions for what you see Bitcoin, clocking in at toward the end of August, or does that have no effect on what you believe is coming next? Is this a different market entirely than that we've seen maybe in previous cycles?
I mean, for me, that's a great observation. For me, we're just plans are very solid as we expected.
Mm-hmm.
For me, targets haven't changed at all. And also, if we very quickly see, Hank, our BTC chart, which, by the way, it's looking marvelous. We had, remember, this push coming up from April. We started building our very nice bull flag since May, ends of May till July, till a couple of weeks ago. So for me, what we're doing here is we're creating a small correction here, which may last a little bit, maybe come to 113, or we just reclaim here. It doesn't matter. Whatever it is, for me, this is a bull flag. And I'm expecting, honestly, in the following days to reclaim this zone, which would be like, if we break out $120,000 again, for me, it's go time to $135,000 if it lets us, So, I mean, I'm very positive on BTC charts for now. What would break our structure? Hank, I always love to say the plan A and plan B, because you gotta plan the trade and trade the plan. So what would make us a little bit more worry is if we start breaking into the $110,000. That for me, it's very, very worry, and it's a change of market structure and of targets. But for me,
right,
as long as we're continuing this, bullish pattern, I'm expecting very well all-time highs.
Love to hear it. Now, I know we got to let you go in here in a second, Luca, but before we do, one last question. Other friend of the program, Carlos Meslat, was on the show last week. He said, according to how history has gone so far in the past, the Bitcoin high of this cycle should probably be sometime between like October and the November range. Carlos thinks we could see new Bitcoin highs of around 159 by that time. Given the trajectory we're at currently today, what are you thinking we could see as the high or top of this current market cycle we're in?
The top of this current cycle, it can definitely be that. What I'm expecting in a shorter term, Hank, I love to see more short time frame in that sense, is coming up to the next 45 days probably. I think it's pretty cool to say we expect to be hitting like $135,000 to $145,000.
Love to hear it. All right, Luca, I'm going to let you go as always. Thank you so much for your time today. Before we do get you out of here, where can I send our audience if they want more of your chart analysis?
Thank you, as always, Hank. It's a pleasure to be here, and I'll be tweeting a little bit when I can on Look at Roxom. So thank you very much for having me. Always a pleasure, and see you then.
Sounds good. Great to have you back. Enjoy the beginning of
Bye-bye,
your week.
Hank.
All right, we're taking a break. Yeah, bye, Luca. All right, we're taking a break. When we're back, let's get into it with our top stories of the day and our bull run. Stay tuned. Blockchain Report coming right back. All right, welcome back. It's time for this morning's bull run. Let's go over the top stories of the day. Starting us off, PayPal. Well, they're back in the crypto game, and this time they brought a shopping cart. The payments giant announced it will now allow businesses to accept over 100 cryptocurrencies, including Bitcoin, Ethereum, and Solana, because apparently pay with crypto is now more than just a marketing slogan from 2021. The new feature lets users convert crypto to stable coins or fiat on the fly, supporting transactions across major wallets like Coinbase, Kraken, and MetaMask. According to PayPal CEO Alex Chriss, this move is aimed at helping businesses of every size deal with the chaos of global payments. Or in other words, crypto's faster, cheaper, and actually works, and we're tired of pretending that it doesn't. The announcement comes as PayPal continues expanding its crypto services, going from dipping a toe in the water to full-blown cannonball. And while Ethereum and Solana made the guest list, make no mistake, this is a Bitcoin headline. Because when PayPal opens the floodgates for everyday businesses to accept BTC as payment and converts it seamlessly behind the scenes, it's one step closer to making Bitcoin the default for global commerce. Now, this isn't some niche integration here, gang. This is the kind of mainstream adoption that turns hodlers into spenders and businesses into accidental Bitcoin bulls. So yeah, you can still buy alpaca socks with Bitcoin, but now you can do it at scale. And in other news, Bitwise Chief Investment Officer Matt Hogan has officially gone off script. Instead of following the gospel of Bitcoin's sacred 4-year cycle, Hogan is betting the real fireworks won't happen until 2026, saying, "I bet 2026 is an up year," in a video that he shared over on X. "I broadly think we're in for a good few years." Translation, don't expect the party to end this year. The best might still be ahead. Hogan believes the halving narrative is losing its steam. But why? Well, because the impact of each halving gets weaker over time, like a movie franchise that peaked at the sequel. Each one cuts rewards by a smaller absolute amount, and that's not enough anymore to single-handedly drive price explosions. Instead, Hogan points to a cocktail of bigger forces: improving regulations, rising institutional adoption, and a macro backdrop that could drive capital from bonds and into Bitcoin. One of those forces, of course, is Donald Trump, whose pro-crypto stance is energizing the market and is also ramping up pressure on the Fed to slash interest rates. Now, if this happens, bonds lose their appeal and risk-on assets like Bitcoin start looking a whole lot better. Hogan also noted that crypto is no longer the wild, wild west. With regulations slowly improving and traditional finance moving on in, the space feels less fragile and less prone to catastrophic wipeouts. He still acknowledged some risk, however, especially from the rise of Bitcoin treasury firms, companies buying BTC using debt or stock issuances. Now, if the market turns and those firms are over-leveraged, things could unravel pretty quickly. Now, Van Eck has raised similar concerns, warning about the debt-fueled Bitcoin accumulation craze. But even with those caveats, Hogan thinks the next leg up will be more like a sustained, steady boom than a turbocharged bull cycle. And, well, he's not alone. Bitcoin is currently trading around 118K, up over 10% in just the past month. CryptoQuant CEO Ki Young Ju is also singing the death song for the 4-year cycle. He says old whales are selling to new long-term holders, and institutional adoption is even bigger than expected. But not everyone's ready to ditch the old playbook just yet. Crypto analyst Rect Capital argues that if Bitcoin follows the 2020 cycle, we're looking at a peak this October, exactly 550 days post-halving. Meanwhile, Tom Lee is doubling down on Bitcoin as digital gold, forecasting a long-term price target of $1 million. He thinks 200K to 250K is completely reasonable and represents only a sliver of gold's market cap. He's also pointing out to recent regulatory wins, like the Genius Act, as a bullish sign for the entire sector. So whether it's a slow burn or a vertical launch, the takeaway is the same. Bitcoin's not done yet. And according to Matt Hogan, the real fun might be next year. And everyone and their laser-eyed aunt seems to think that Bitcoin's about to hit 200K by Christmas. But Glassnode's lead analyst James Check, he's not lighting that candle just yet. In a recent interview, Check threw a wet blanket over the hopium bonfire, saying $200,000 by year-end is very improbable, mostly because the market has the enthusiasm of a Zoom meeting on a Friday afternoon. How on earth can we be going up when there is no volume, he asked. Well, that's a great question, James. Unfortunately, this is Bitcoin after all. We've seen it pump on less. Still, Check's got numbers on his side. At the time of the interview, Bitcoin was sitting around 119K with a $2.38 trillion market cap. Now to hit $200,000 by Christmas, it would need to nearly double in 6 months with no signs of sustained buying volume. Check called that a big move, which, yes, is an understatement. It's like calling Michael Saylor mildly committed to Bitcoin. There he is. Check added that until volume kicks in, he's staying off leverage and away from the risk curve. Or in other words, no YOLO calls until the charts stop looking like a heart monitor. Now, in fairness, Check isn't anti-Bitcoin. In fact, he's far from it. Most of his net worth is in BTC, and he does believe we'll be well and truly past 200K in the next 5 years. He's just not betting the farm on it happening before New Year's Eve. And to be clear, he's not alone in his caution. Check laid out that 200K isn't a single jump. First comes 120, which we got, check, then 130, then 140, then 150, so on and so forth, each level needing its own support. And without it, he says the price trades like air on the way back down. Not exactly the confidence-inspiring quote you want heading into Q4, but others are still pounding the table. Bitwise CEO Matt Hogan, who we just spoke about, predicted 200K by the end of 2025, citing institutional demand and post-halving supply shock. Anonymous chart whisperer APSK32 is riding the same wave, pointing to power curve trends and claiming we'll hit $200,000 in Q4. Bernstein Research has been on the 200K bandwagon since October of last year, also citing ETF flows and Treasury adoption. So if you believe in charts, institutions, and repeating past cycles, the forecast is bullish. But if you believe in volume, market structure, and the laws of gravity, James Check says don't pop the champagne just yet. Then again, Bitcoin has a funny way of doing exactly what no one expects, especially after someone calls it improbable. Ask anyone who sold back in 2018 or 2020 or 2022. Or better yet, don't. They might still be recovering and need a little bit of time. According to Fidelity Digital Assets, 35 publicly traded companies now hold at least 1,000 Bitcoin each. Because when inflation hits, nothing screams strategic treasury planning quite like YOLOing into digital scarcity. This marks a jump from the 24 companies at the end of Q1. So yeah, corporate Bitcoin hoarding is officially in bull market mode. These firms collectively hold over $116 billion worth of Bitcoin, proving that BTC is no longer just for Twitter influencers and laser-eyed podcast hosts. Now, Chris Kuiper, VP of Research at Fidelity, says the shift shows Bitcoin moving from a speculative bet to a legit corporate asset allocation strategy. Not bad for something that was once used exclusively to buy fake IDs, Molly, and alpaca socks. Institutional Bitcoin adoption isn't just for the 1,000 coin club either. Data from BitcoinTreasuries.net shows that 278 public entities now hold Bitcoin, up from just 124 weeks ago. Let's bring up the website here, BitcoinTreasuries.net. Now, this is the best place on all the interwebs to see what your favorite public hodlers are doing with their Bitcoin. So, if we take a look at the list here, right now, this is our top leaderboard of the hodlers. Right now, we have Strategy, of course. They're up at the top with 607,000 Bitcoin. Weirdly enough, no buy from MicroStrategy this past week, which means I think our boy Michael Saylor's up to something. Below them, you'll see we have the Bitcoin miner Mara Holdings with exactly 50,000 Bitcoin. And what's really great about this website is you can click on any of these and get a more detailed view of what they're doing, what their Bitcoin, and how it's affecting their business. So, for instance, let's click on Strategy here at the top here, gang. So if I click on Strategy right here, it's going to bring up Strategy's individual page, right? And this is all the information that we want about Strategy. Ooh, and they even have a video now? All right, up in your game over there. I like it. So if we go below the video, you'll see we have their overall Bitcoin balance, which is 607,770. Their average cost basis, they had this wrong last week, so they need to update that, but it's around 71,000, not 7,000. That's just way too cheap. And their profit loss is also not bad either. I think their profit loss right now at today's prices is around like 60%-ish, but that's kind of a guess based on previous percentages I've seen. So, take it for what you will. And it also shows how it affects their share price. Right now, their share price is around $408 a pop, and their Bitcoin market cap is 62.1%. So their market cap is comprised of Bitcoin by 62%. So they got a lot of Bitcoin right there that's accumulating and making a big portion of their current market cap. So BitcoinTreasuries.net, best place on the web to check out what your favorite public companies are doing with their Bitcoin. So bookmark that one. It's good to have. Let's get back to camera one here, shall we, gang? So what's also nice about that website, and you can check that for yourself, is they go by countries as well. So the U.S. currently leads with 94 companies having Bitcoin on their balance sheet, followed by Canada with 40 and the U.K. with 19. So yes, America is still number one in corporate Bitcoin stacking. We're number one. Don't you guys forget it. But this time, it's not all Michael Saylor. Kuiper says the wave of new corporate buyers is more decentralized, with Bitcoin purchases now coming from a wider pool of firms, not just a few megabulls. Now, in quarter two of 2025 alone, institutional Bitcoin purchases hit 134,456 BTC. That's a 35% increase from Q1's nearly 100,000 Bitcoin purchases. So, while retail investors panic over red candles, CFOs are panic buying the dip. Analysts over at Nexos pointed to Bitcoin futures open interest, now above $45 billion, as more proof that institutional engagement is heating up. And unlike your favorite altcoin, this momentum actually suggests a maturing market. But corporate Bitcoin adoption isn't just for flexing on earnings calls anymore. It's operational. Businesses are now using Bitcoin for cross-border payments, cutting out banks and their delightful wire fees. They're also getting into asset tokenization for things like supply chain transparency and back-end efficiency. In short, Bitcoin is now doing actual work, not just sitting on treasuries like a digital pet rock. Now, as more corporations jump in, they're adding depth and stability to the market, potentially muting some of that retail-driven whiplash that turns crypto Twitter into a support group every other Tuesday. Regulators, meanwhile, they're still figuring it out. But the financial sector, they're not waiting. Fintech firms are racing to build infrastructure for institutional-grade custody and trading, because when it turns out, when corporations ape into Bitcoin, they expect more than a MetaMask wallet and a Discord server. Now, Kuiper calls this a critical inflection point for Bitcoin's journey toward mainstream acceptance, because once 35 companies start using Bitcoin as both an investment vehicle and a strategic operational tool, it's probably not going back into the speculative basement. Now, the big picture here, it's that Bitcoin is evolving from inflation hedge to treasury asset to cross-border tool to corporate finance staple. And if that doesn't scream adoption curve, we really don't know what does. And Bitcoin right now, it's actually currently hovering around that 118K level after briefly dipping its toes into around 114.5 just a week ago. But don't let that relatively calm surface fool you, okay? There's a much louder narrative bubbling underneath the surface. Some are calling it the most calculated supply shock in crypto history. And if it plays out like they think, we're looking at a path that could take Bitcoin all the way to $1 million. Yes, that's 6 zeros for those of you counting at home. The prediction comes from Swan, a Bitcoin-only financial services firm that recently posted on X about the current rally. They're calling it underhyped, deliberate, and eerily calm. Now, in their words, this is the least euphoric bull market we've ever seen. And apparently, that's bullish. But why? Well, it's because instead of meme coin degenerates running wild, this rally is being driven by CFOs and CIOs. You know, the people who usually wear suits to work and they're quietly soaking up Bitcoin via algorithmic drip buys. It's called, wait for it, deliberate absorption, okay? Coins are getting pulled from the weak hands, then reset with each breakout. No hype, no fireworks, just slow, relentless accumulation while retail investors are too busy watching altcoins collapse. But not everyone's asleep, okay? Crypto personality American Hodl says we're on the verge of a .com level treasury bubble. According to him, once corporate balance sheets start flexing their Bitcoin reserves, it'll trigger a full-on boardroom panic, not unlike what happened during the internet boom in 1999. He thinks this could ignite a 3 to 4 year run that sends Bitcoin well beyond $1 million. Now, Swan researchers laid out their version of a Bitcoin to $1 million roadmap, and it's got 4 stages, all right? Stage number 1, quiet corporate absorption via algorithmic buys. Stage 2, sovereign stacking Bitcoin on the down low. 3, major treasury firms finalizing their bid structures. And stage 4, narrative contagion. That one's my favorite. Now that last part, narrative contagion, that's definitely key to this. That is the moment that the story catches fire and the whole thing begins to go vertical. According to Swan, that's the setup for a mania-fueled blow-off top toward $1 million. They point out that Bitcoin already ripped from 42K to 123K during a historically tight monetary cycle. So the real question is, what happens when cheap money comes back? Especially when whales like Nakamoto, 21 Capital, and the Strive Asset Management are reportedly circling, structuring SPVs and lining up M&A plays before going full beast mode on Bitcoin. Now this rally, it might feel a little quiet now, but if this scenario unfolds, it won't stay that way for much longer. And in the latest chapter of AI Says Stuff, Elon Musk's chatbot Grok has predicted Bitcoin will hit 25 million per coin by the year 2046. That's right. In 21 years, one Bitcoin might be worth more than a Beverly Hills mansion. Now that prediction came after Chaitanya John, a former Blackstone analyst and current strategy executive, asked X what the price of Bitcoin might be in 2 decades. Grok responded with a 3-part breakdown that somehow didn't involve the words number go up. First, it looked at Bitcoin's historical compound annual growth rate, roughly 30%, which pointed to a future price around $13 million. Then it brought in the infamous stock-to-flow model, which values Bitcoin based on scarcity. That bumped the estimate up to over 50 million. But Grok wasn't done. It also included adoption metrics like Saylor's thesis that Bitcoin could grow 29% annually as it morphs into a global reserve asset. That put it around 21 million. Grok averaged it all out to about 25 million because apparently when you blend history, math, and hopium, you get 250,000 Benjamins per coin. Naturally, X lost its mind because nothing gets the crypto crowd going quite like an AI-powered moon call. And while skeptics are out here reminding everyone it's just a chatbot, fans are already updating their laser-eyed memes. So if you're feeling bad about not stacking at 110K, don't worry, you've got until 2046. And according to Eric Balkunas, those epic Bitcoin green candles we all used to live for, you know, the ones that turned us into irrational, euphoric lunatics, well, that may be going extinct. And you can thank ETFs for that. Specifically, IBIT, BlackRock's Bitcoin ETF that has officially crossed the $100 billion in assets under management mark, making it the fastest ETF to ever hit that milestone. And that means the big boys are here, which also means price swings are getting, well, a little boring. Balkunas argues that we're entering a new era where massive jolts in price are replaced by slow, steady creep-ups like watching grass grow, but, you know, with more Lambos. He says big money from institutions is smoothing out the volatility. Case in point, Galaxy Digital recently dumped 80,000 Bitcoin, and the market, well, didn't care too much. Bitcoin just kind of hovered between 116 and 120K like it had no idea a whale had belly flopped into the pool. Pre-ETF, that kind of sell-off would have triggered a 20% crash and 12 clickbait headlines about crypto winter. But now, it's just called a Tuesday. Balkunas thinks this could make Bitcoin more usable as an actual currency. No more wondering if your coffee is going to cost $3 or $300 depending on the next tweet from Elon Musk. Citigroup even did the math. They estimate that for every $1 billion in ETF inflows, Bitcoin's price jumps about 3.6%. So if that momentum continues, Citi thinks we're headed toward 199K before the year's end. But don't worry, the fun's not totally over. There are still risks to all this. Some early whales are cashing out and piecing out. And with institutions moving in, the volume might shift to the sketchier parts of crypto, like unregulated exchanges and complex derivatives that even the creators don't fully understand. Still, the big takeaway here is this. The roller coaster isn't gone, but it's being replaced by a nice, smooth escalator. And if Bitcoin's going to be the future of money, that's probably a good thing, even if it's less fun for us degens. All right, we're taking a break. When we're back, more blockchain report and today's special guest coming up in just a bit. You won't want to miss it. Stay tuned for that and more. All right, welcome back. It's time for a little bit of whale watch where we see what all the whales are up to so minnows like this know where to follow. But joining us for whale watch today, we got a special guest for you. He's a man who's been he's been deep in the digital trenches since most of you or your friends could even spell blockchain. He's the director of the digital assets at Quasar Markets, a seasoned educator, analyst, and one of the sharpest minds in crypto. Whether it's breaking down billion-dollar whale moves or calling out signal through the noise, our guest brings clarity, insight, and zero fluff. Please give a big blockchain report welcome to the always plugged in and always fired up Howard Greenberg. Howard, they love you, our audience love you, and we're super excited to have you here this morning. Oh, the pleasure is all ours, Howard. Now, before we get started diving into today's news, I would love for our audience that's not already familiar with you, could you give us a quick breakdown of what exactly you do at Quasar Markets and how you ended up diving headfirst into the world of Bitcoin and digital assets?
Sure. I'm the director of digital assets at Quasar Markets. I wear a few hats. I also am the president and co-founder of the ABCA, the American Blockchain and Cryptocurrency Association, a 501c in DC that works on the adoption of blockchain technology at a federal level. At Quasar Markets, we're trying to democratize, the world of crypto for like you said, the minnows. We're trying to bring the institutional learnings that we've had over the years. I've been in crypto since 2013, and bring those to the everyday person. Try to bridge that gap of knowledge and, tell you what's actually going on behind the scenes.
Well, that's amazing, Howard. We're certainly excited to have you. And we've had Stephen, your colleague, on the show before, and we love what you guys are doing over at Quasar, really making it more of an even playing field for all of us investors out there so we're not all getting killed by those whales and how they control the markets in the way they do. So we certainly appreciate you and your expertise with us on the show today. We're going to go over this story. I'm going to bring you right back, and we're going to chat about it. Sound good?
Awesome. Sounds great.
All right, rock and roll. Hang tight. Okay. So for our whale watch today, we had a long dormant Bitcoin whale from the Satoshi era. Well, they have re-entered the chat, and by chat, I mean they moved more than $1.1 billion worth of Bitcoin to centralized exchanges like Binance, Bybit, Bitstamp, Coinbase, and OKX. Because apparently after 13 years of doing absolutely nothing, this guy picked the lowest liquidity weekend possible to ask, what if I dumped all my Bitcoin? According to Look On Chain, this wallet originally held 80,009 Bitcoin, currently worth around $9.68 billion, and has been asleep since 2011, back when Bitcoin was the price of a sandwich and Mt. Gox was still considered a good idea. Then on July 15th, it sent 40,000 BTC, worth over $4.6 billion, and followed it up with 3 days later with another 40,000 Bitcoin, both transactions heading over to Galaxy Digital. And now Galaxy has moved 10,000 BTC worth about $1.18 billion across major exchanges. Because nothing says weekend vibes quite like unloading $1 billion in ancient digital gold onto live order books. Now, the timing also happens to coincide with the new auditing requirements under the Genius Act, which definitely isn't helping soothe the mood among fragile hands. Jacob King, who's the CEO of WhaleWire and aspiring market funeral director, said the move alone will burst the biggest bubble and fraud in financial history, Bitcoin. He added that Bitcoin is entirely propped up by fake money printed out of thin air. Cool take, bro. Meanwhile, analysts at Bitfinex reminded everyone that dormant whale movements have not consistently preceded significant market corrections. They added that this should not overshadow the constructive momentum the crypto industry is gaining on the regulatory front. Or in other words, everybody just breathe. They also floated the idea that this whale's sudden reappearance may not be bearish at all, but instead signals readiness for the next institutional cycle. Because maybe Grandpa Whale isn't dumping, maybe he's rotating. According to on-chain analyst Ember CN, about 12,000 BTC or $1.38 billion remains unsold. And he believes those coins are being offloaded through a mix of OTC deals and secondary market sales, meaning the market may absorb the remaining portion without a significant impact. So, yeah, $9.7 billion whale sale might actually land like a soft fart. Ki Young Ju, founder and CEO of CryptoQuant, says the whole saga proves Bitcoin's cycle theory is dead. Or in his words, last cycle, whales sold to retail. This time, old whales sell to new long-term whales. He also added that institutional adoption is bigger than we thought. Trading feels pointless. Holders now outnumber traders. Because apparently, diamond hands are the new trading strategy. Other analysts have pointed to the rise of U.S. Bitcoin ETFs and growing institutional investment as the real disruptors of the old four-year Bitcoin cycle theory. BitGet COO Vugar Usisad said firms like Strategy, Tether, and MetaPlanet are accelerating Bitcoin's traditional cycle and may help drive prices to new all-time highs. So while the Satoshi era whale is busy clearing out his attic, Wall Street is outside holding a welcome banner and a fresh ETF filing. All right, we're bringing back Howard to the show. Howard, after 13 years of dormancy, a Satoshi-era whale suddenly is moving $1.1 billion worth of Bitcoin. It has got everyone panicking. Is this kind of movement genuinely bearish, or are we overreacting to an old wallet hitting send? What do you think?
Overreaction. Mike Novogratz called it on CNBC. He said people are selling Bitcoin and getting into Ethereum, and he went home and dumped it for the guy. I mean, I don't know how clearer it could have been. A few things at play. As we know, the halvening always has a delayed reaction. Everybody thinks the price is going to move the day the halvening happens. It doesn't. It happens 6 to 8 months after. We're now seeing that sort of play out. There's not enough liquidity, quite honestly, for these institutions, so it is important that we find liquidity, and whales are providing it. We've seen it for the last 6 months, especially in the OTC market, as you alluded to, where they're paying a premium. You're seeing up to a 10% premium being paid for large, deposits onto OTC markets. So why wouldn't you take advantage?
Yeah, absolutely. Do you feel like something like this, too, could maybe be a signal of the so-called altcoin season everyone's been waiting for with bated breath, people taking off the top of this frothy Bitcoin price and circulating it into hopefully higher alpha plays?
Yeah, absolutely. We definitely see that. I mean, the move into DeFi has been dramatic over the last month and a half in total value locked, and we're not even halfway to where we were in 2021. So there's going to be a race. It's, sort of like institutions are not positioned well in the stock market right now, as they've said, as we're at all-time highs. There's a lot of players that aren't positioned correctly for this DeFi run that's coming. The tsunami is on its way.
Oh, yeah, it definitely feels like that right now, especially with things like we have the Genius Acts. New auditing requirements are kicking in after it was passed recently. Do you think this whale could be moving preemptively to comply? Or is this maybe just a convenient coincidence right now?
I think it's more of a coincidence than anything regulatory-wise. I do. I just think it's a coincidence in timing. I think the timing's right. Markets are overbought across the everywhere, right? Across stock markets,
Right.
equities, gold, everything's been on blow off tops. So if you're going to put some money into cash or to start to, as you said, transfer to altcoins and look at what's next, this is the time to do it.
Yeah, it's certainly feeling that way. And a big discussion topic as of late that was echoed by Qi Young Zhu in the story was that this whale proves that Bitcoin cycle theory is dead and that today's whales are just selling to new long-term whales. Does that match what you're seeing in the current market structure? Do you think the cycle theory is dead? Are we entering a whole new phase of Bitcoin's journey?
No, because again, that's the misnomer out there that it happens the day the halvening happens. It doesn't. It always is a trailing indicator. Supply changed. The amount of supply that's released every day was changed in April, and now last April, and now it's finally hitting the markets. So the difference you're going to see is all these Bitcoin treasuries. If they're really holders of last resort, that changes the narrative 4 years from now.
Mm-hmm. And we noticed last week we did have a small dip. I think we touched in the 114 range for like a hot second. Do you think that events like this big sell-off still hold the same impact that they used to, or has the rise of ETFs, institutional adoption, and algorithmic buying made even a $1 billion Bitcoin sale feel absorbable, kind of to the point of the story?
Yeah, absolutely. You just nailed it. It's not, in the old days, it would have dropped 20% on that type of move. We're not seeing double-digit moves. We're not seeing the liquidations hit. That's the other part, is even with the extended open interest we're seeing across derivatives because of the advanced traders, we're not seeing the liquidations. And again, in the old days, everything was denominated in Bitcoin and your holdings were either Bitcoin or Ethereum, and they were volatile. So your liquidation levels moved based upon that also. Now everybody's using stable coins. So you took one of the factors that made it more difficult to trade perpetual futures and made it so everyone can understand it a little bit better. They know where their liquidation levels is. Back in 2021, I would ask people if they knew if they were doing a 20x long, what their liquidation level is, and they couldn't tell you. Now they can.
Mm-hmm. And this has been a really unique cycle, it feels like, for Bitcoin compared to ones of the past. We have all these institutions coming in, but it still seems like retail is absent from the party. I like to ask this of our most recent guests because it seems apropos of the times. Where do you feel like retail is during all this? Are they feeling priced out? Is this a unit bias issue, or why aren't they in the party right now? Things are looking good, yet Bitcoin searches, if you look at like Google Trends, are still pretty low. I don't understand what's going on. What do you think?
I don't think it's sexy enough for everybody. They're searching. You look at the meme coins. Bonk is the #1 mover today on Coinbase to the upside. Unfortunately, I get asked every day. And when I say, what should be the first coin you buy, and I say Bitcoin, everyone shakes their head. They don't like that answer. They want to hear about the sexiest new meme coin that might go 1000x on them. And, it's the wrong philosophy. And I'd also say retail is so heavily into the stock market right now, as we've seen by every report, that's the other thing, is that we're seeing that. I think we see it every weekend, right? Saturdays and Sundays. What's been happening? Trading volumes haven't dropped down like they used to ridiculously low levels, and prices have actually moved up every weekend. And then traders Sunday night into Monday morning sell their Bitcoin and they move back into the stocks, it looks like.
Right. What do you think it's going to take for retail to join the party? Are we at kind of that weird level where Bitcoin is so expensive that people think they're priced out, but it's not expensive enough where people feel like accumulating even 0.1 of it makes sense? Because if you look at it compared to traditional markets, what Bitcoin is accumulating on the year to year is still going to beat almost everything else out there. Why isn't retail seeing that? Are we not doing a good job as Bitcoiners explaining like, hey, this is still a really smart play over time, even if it's not going to double all the time? Like, what are we doing wrong right now to not get that word out properly?
It's the weirdest thing I've ever seen. People only want to buy Bitcoin at all-time highs. And that's what we'll see. We just saw it recently, and what happens is the first to sell. They're the weakest hands. The paper hands come out and they fold immediately. When it doesn't, when it hits 123 and doesn't go immediately to 150, This was when I thought it was. There, unfortunately, it's the same rinse and repeat that we see there. Retail loses and smart money keeps winning.
Yeah, I had a buddy who, when Bitcoin hit the 123 most recent high-ish, right around there, he just texted me. He's like, uninspiring new ATH, and I'm like, what do you want, man? This thing was, 60 grand, like 2 years, yeah, it's just.
Yeah, it was
they'll come around
78,000.
as they always do.
Less than a year ago.
Yeah.
So that's it. And again, at 115, as I sent out to all of my students at Prosper Trading, was the thesis didn't change. Buy. I was hoping it was going to dump right to the fib level at that 113.5. It didn't get there. It didn't go far enough. It hit the 50% retracement and stopped. I was looking for it to hit that golden ratio.
Yeah. Do you think it could be because when a lot of people, they hear crypto, right? They associate Bitcoin with crypto. When they think crypto, they're thinking really high alpha plays. And they're also thinking, though, when they hear crypto, risky, right? Risk on asset. Do you think we're at this kind of weird point where Bitcoin is still, it's quite high, near 120, but it's not high enough given that people still see it as such a risk-on asset? Like, it needs to be higher for anybody to kind of take it seriously. Otherwise, they're like, well, I could buy bonk and have a much potential higher alpha play, and it's also a risk-on. So is it like, are we in this kind of weird spot right now for Bitcoin, and maybe that's why retail is just like, I think I'll buy bonk instead?
Well, and I'd also argue that retail is buying the ETF, unfortunately, which I don't agree with. There isn't a reason for them to do that. Why are you paying someone else to be the bank when you can be the bank? That's always been my takeaway, but that's who's buying the ETF. It is institutions, but all you got to see is that, BlackRock's ETF is now the most successful ETF ever launched. To see that retail's going into it. And again, it means they don't have to leave their Robinhood account. They don't have to leave their Schwab account. They can do it all in one place. Although I guess with Robinhood was a bad example because they could do crypto straight there. But that's what I'm seeing is that retail is still buying, but they're doing it with the ETF.
Yeah, do you think that's because with the ETF, there's like an additional level of comfort for people that aren't necessarily in the Bitcoin?
Just easy. My 90-year-old dad,
keys. Yeah.
Yeah, my 90-year-old dad, he's not buying on Coinbase, even though I've shown him 4 times. He's like, if I can hit the button on my Schwab, on my Fidelity, on my IKBR and get it, yeah, it's easier. My accountant, like you said, I ran into those problems for years. No one wanted to do my taxes. So now that stuff's working out and it's a lot easier to do those things nowadays, but I think people still live that. And the hype cycle of everyone's going to steal your Bitcoin is still, I think that's where we maybe do a bad job, is where we don't do enough to tell people the easy things to do to protect it. And that it's the same way you wouldn't give your bank account information to anybody. Don't give your crypto information to anybody.
Yeah, no, I think that makes a lot of sense. We're definitely at a point where there's this security and UX and UI issues that need to be further serviced within the Bitcoin ecosystem for, I think, really true mass adoption to happen, because it's just a little, like you said, your dad, my mother, they're not touching Bitcoin or their own wallet addresses or anything, but we're seeing that slowly evolve through companies like Block, and PayPal's making it more accessible, as we talked about.
And that's what I would recommend to people is exactly, if you already have a PayPal account, you have easy access to one of the Bitcoin maximalists. Jack Dorsey over at Block is obviously going to protect your Bitcoin for you. Those companies are well suited to make it easy. And I will say that the advent of the new user interfaces across even Coinbase are light years ahead of where they were 5 years ago.
Yeah, I think we're definitely in the right direction, but we know it's going to take time, but we're getting there. We're 300 million Bitcoiners strong, I think, in the world right now. So that number is just going to keep rising as these new products are built.
Still only 6% at that point. Just keep that in mind, right? Where the internet was in 1990.
Right, yeah. Similar adoption curve to the internet, credit cards, checks. It takes about 15 to 20 years on average for those to kind of reach the mainstream. So I think we're getting pretty close to that new inflection point right now. So exciting times for sure. Howard, hang tight. We're going to start over our bull run. We're going to continue that with our bull run stories. Let's run the stinger here, guys. All right, so we're back with a bull run with my good friend Howard. We're going to bring him back in just a second. But first, our Lord and Sailor, Michael Saylor, there he is. He's back. And if history's any guide, so is another bullish Bitcoin buy. The strategy executive chairman who treats Bitcoin like a religion and a corporate treasury management like a high-stakes poker game has posted the company's portfolio tracker on X. That move has become the bat signal for incoming Bitcoin purchases. There it is. Now, the tracker shows over 607,000 BTC on Strategy's balance sheet. At current prices, that's $71.8 billion worth of magic internet money. And if the past is prologue, that tracker post means another buy is most likely imminent. Last week, Saylor did the exact same thing. He posted the tracker, then he scooped up over 4,200 BTC. It's almost like he's trolling the market at this point. Strategy recently crossed the 600K Bitcoin mark, took a short breather, then came back with back-to-back weekly purchases. So yeah, this next one would be the hat trick. His caption, "It all began with $250 million in Bitcoin." A nostalgic nod to the company's original $250 million buyback in 2020, the moment they went from software firm to Bitcoin hoarder. And guess how much dry powder they might be working with now? Try $4.2 billion. That's what they raised from their STRD offering, and they haven't deployed it yet. They also recently bumped their STRC IPO from $500 million to $2.4 billion. Because apparently, when it comes to Bitcoin, moderation is for cowards. Meanwhile, Mara Holdings, the second largest corporate Bitcoin holder, is raising $850 million for their own little shopping spree. Now, if these institutions keep stacking, analysts think Bitcoin could reach 130K, assuming the 110K support level holds. So yeah, Strategy might be buying more, but really, did they ever actually stop? We're bringing Howard back. Howard, Michael Saylor just teased another monster Bitcoin buy, and with Strategy holding over 600,000 BTC currently, I know you've started to question the risks of too much Bitcoin in one place. Walk us through your thinking on that.
Yeah, I love Michael Saylor. Listening to him to talk ever, I go and buy Bitcoin immediately when he's done speaking. So I can't argue with that. But I got into Bitcoin for the true decentralization of it. I don't want to see any company, any individual that could, have too big of an outsized influence. And I do worry about it. MicroStrategy is better positioned, in my opinion, these other Bitcoin treasury companies are, because they have a plan. I do trust that Michael Saylor has a plan. I do think he wants to be the bank of Bitcoin, and he's going to try to build out that infrastructure. He's going to try to get that going, and he's going to have those answers and bring alpha to Bitcoin. If you're just buying a Bitcoin treasury company because they own Bitcoin and they don't have a plan, then I don't get it. I really don't. But Strategy, I love. I do think that they have a plan in place for sure. My thing is it's just getting too much too quick.
Yeah, it does kind of feel like that. And I agree. I assume they have some kind of plan in place. I think it's unlikely that Michael Saylor is going the South Park underpants gnomes method of like buy Bitcoin, step 2 ? Step 3 profit. I got to feel like there's a bigger overarching narrative within Strategy's game plan that they plan on doing something with this Bitcoin soon rather than just holding it. But with that being said, they're not too bad just being long-term hodlers, as I think they're up like 60%-ish in unrealized gains over time. So I guess Michael's doing okay. But it does kind of beg the question, is there a point where Saylor's conviction becomes, let's call it counterproductive? I mean, too much centralized control wrapped in a decentralized narrative? Could that be a problem?
I do think so. I think we're already seeing it. I talk to people who have a lot of the similar ideas that, it was great before and now I'm worried about it. It's too much, too quick. We don't want somebody holding that much. If you've got a plan and, it's to support the Lightning Network where you have to have a lot of Bitcoin to make that move quickly and work well, then sort of let us know what's going on, because the only thing they've ever talked about was that partnership with Block and, the crypto mining thing in Texas. And that we haven't heard much since the announcement. It's sort of like a Trump announcement. Sounds good off the stat, but I don't see any backing.
Right. No, I mean, Michael is great at, preaching the good word of Bitcoin, but we haven't seen a lot of moves outside of we're buying Bitcoin forever, and for every Bitcoin you don't buy, you're losing out on like $13 million. So
Right.
it makes me wonder, compared, yeah, go ahead, please.
I was going to say, and as analysts have pointed out, what happened is the law of diminishing return. His Bitcoin buys now aren't worth the same amount towards the share price as they were earlier. So that's the only other thing I would point out.
Yeah, and when you compare what Strategy is doing to a company like, let's say MetaPlanet, for instance, who at least has been talking about using Bitcoin for acquisitions or building something else, do you see Strategy falling short right now in their inability to really disclose what the whole plan is? Or are we just putting our full faith in Saylor and letting him do his thing because he hasn't been wrong yet?
I'm going to go halfway in between. I know that there's a lot going on behind the scenes there. They've hired a lot of developers. I know some people that work over there. They're building stuff behind the scenes. They are trying to build out a DeFi. They're still trying to figure it out. The problem they're going to run into is Bitcoin was designed to not have smart contracts, to not really be fast. It was faster than traditional finance, but not at the speeds that we would need it to be for certain, functionality that we want right now. But they're building that out, whether it's these side chains. You just got to look at what Plasma's, raise did today to see that people are interested in the use of Bitcoin rails, whether it be Jack Mallers and what 21X is doing, or what we think Michael Saylor's, or what I think Michael Saylor's doing behind the scenes. But I do think that Strategy wants to be a bank that's going to provide lending and borrowing of Bitcoin and the use of it in more of a the way traditional stocks get handled.
Yeah, I think their returns from Bitcoin is just absolutely blasting out of the water the returns from their actual software business. So it looks like they might be making some kind of large pivot in the near future, given their giant dragon's hoard of Bitcoin they got right now. And it makes me wonder, from like a bigger picture perspective, do we want 5 companies holding 100,000 Bitcoin? Or is it better if 5,000 companies are holding, $1,000, 1,000 Bitcoin each? What is actually better for Bitcoin long term, having these big Bitcoin juggernauts or a bunch of people holding a little bit less?
No, the true vision that we should all have is that Bitcoin, thousands of companies hold part of their cash reserves, and Bitcoin is a diversification. That's the true first step if we want that adoption curve to happen the right way. That's what I want to see. I want to see hundreds of companies doing what Tesla did, right? Tesla took part of its cash reserves, put it into Bitcoin, and they're up about 1.5 billion. That's not bad. But that would be the way to do it. The same way they diversify into other currencies, they diversify into gold. They should have it as part of the answer. It's not the total answer unless you're going to use it. Again, if MetaPlanet's going to use it, I'm okay with that. If you're, a pharmaceutical company who wasn't doing very well and realized that you could, and that's why we're seeing all this insider selling on these companies, is if you realize your stock was in the toilet and all I got to do is announce I'm going to buy a couple of $1 million of Bitcoin, it goes up 20% and then I cash out. Don't be liquidity for others.
Right. No, 100%. If they should look on the screen here, we have an interesting graphic. This is showing how many these are all the big Bitcoin holders or entities holding Bitcoin right now. So we can see of the 281, was it 150? I'm having a hard time reading. 160 are public companies right now, which is super interesting. Do you, I guess my next question was, do you feel like I have lost my train of thought? No, I guess what I'm wondering is, what we've seen the allocations that people recommend that a company or a person should have in Bitcoin. It was like 1% to 2% of your net worth is what people are saying. And now people are coming saying 4% to 5%. What do you think is the right percentage that a publicly traded company should be holding in Bitcoin right now? Because that number seems to keep changing and getting greater. What feels like a safe allocation to you if you're recommending this to public companies at scale?
5%. I'm an easy guy. 5%. It should be what most people recommended for gold for years, right? It was 5%. This is the new answer to gold. I can instantly access it. I can bring it anywhere. And it truly is a capped, number of 21 million. They won't find more. So, but that answer for me is pretty simple, is right around that 5%. And then from there, it's on the conviction of the actual individuals that are running those companies. But it shouldn't, in my opinion, shouldn't be above 25.
Okay, 5, no higher than 25. That seems like a very safe but forward-thinking move right now in today's ecosystem for sure. All right, so hang tight, Howard. We're going to bring you right back because right now we're talking about MetaPlanet, the Japanese investment firm, who is now back on the Bitcoin leaderboard after loading up another 780 Bitcoin and officially securing its spot as the largest non-US corporate Bitcoin holder on Earth. That brings their total Bitcoin stash to over 17,000 BTC, or over $2 billion in digital gold. And they did it with a Monday morning flex, disclosing the new purchase at an average price of about 17.5 million yen per coin, which is about $118,000 in USD. The total bill for the buying spree, $92 million. Their all-time Bitcoin tab now stands at a cool $1.7 billion with an average entry price of about $99,600 per BTC, which means MetaPlanet is not only stacking, they're winning. As of now, Bitcoin's trading at around 118K, just above the company's latest buy-in price. And in case you missed it, BTC is up 0.75% in just the last 24 hours or so. But this isn't just about bragging rights here, gang. MetaPlanet isn't collecting coins to stare at them. Recent reports say the company plans to use its Bitcoin reserves to acquire cash-generating businesses, including a possible digital bank in Japan. Because apparently the new way to build a financial empire is to buy Bitcoin first, then figure out the business model later. According to BitcoinTreasuries.net, we just saw a minute ago, MetaPlanet is now the only non-US company in the global top 10. They're currently ranked at number 7, sandwiched between Trump, Media, and Technology Group that has a little over 18,000 Bitcoin, and Galaxy Digital with close to 13,000 BTC on their books. And yes, they're still miles behind the final boss of corporate Bitcoin holdings, of course, which is Strategy, sitting atop the leaderboard with over 607,000 Bitcoin, worth nearly $72 billion. But MetaPlanet, well, they're doing just fine. Their Bitcoin obsession has been great for their shareholders. The company's stock is up over 500% in the past year and 246% year to date. On Monday, shares closed at $8.36, which was up 5% on the day. According to CEO Simon Garovich, none of this was expected. He told Forbes Japan, "In just a year, we became the country's top performing stock with record trading volumes and a $1 trillion yen market cap." And no, they're not trying to be MicroStrategy with sushi. Garovich insists they're building a Japan-native model tailored to local regulations, tax rules, and capital markets. They're even making sure their Bitcoin exposure fits inside Japan's tax-free savings accounts. So yeah, it's not a copycat move. It's a localized, Bitcoin-backed, tax-advantaged financial mutation. And so far, it certainly seems to be working. We're bringing Howard back. Howard, you've said you like seeing competition to Strategy in the Bitcoin treasury market. So how do you view MetaPlanet's latest moves now that they're the biggest non-US Bitcoin holder?
I like it. I do. They do seem to have a plan. Japan has much more stringent regulations than we have almost anywhere else when it comes to digital assets, what you can hold, how you can hold it. So them putting it in a way that's going to allow the average Japanese citizen to get access without, again, having to deal with what people here in the US had to deal with former tax issues and trying to figure it out. They seem to have a plan. What I'll point out too is they're better buyers than MicroStrategy, I would say. And what I mean there, MicroStrategy doesn't care. He just buys whatever. It just hits his fancy, it seems like. MetaPlanet's been pretty good at buying the dips. So a little bit of a different philosophy there.
Interesting. Yeah. Michael Saylor is just like, it's all going to be 13 million eventually, and they're not quite as ironically strategic, maybe is the word I want to use. But yeah, no, MetaPlanet seems to be really on the ball with that. And you said before that, and we kind of talked about it previously, that just holding Bitcoin isn't necessarily enough. You want to see these companies actually do something with it. What kind of infrastructure or utility should MetaPlanet be building right now with their hoard of Bitcoin?
From what I understand, they're gonna really try to get into the world of lending and borrowing in Japan with Bitcoin, where you can take your assets and use them as collateral and so forth. And that is where, that's what MicroStrategy, I believe, is going to try to do in the US also, is try to figure out how to unlock that liquidity while still holding your Bitcoin. That's the promise that we see across the other sides, the altcoins, right? Where we can liquid stake and do all these different things. MetaPlanet's trying to figure that aspect out. What also I would point out is, as they've said, they're going to use their profits in Bitcoin to buy things, means they're not going to be a holder of last resort like Michael Saylor said he's going to be. So keep that in mind too. MetaPlanet, what worries me is the first time they actually sell something to buy something, what is the reaction?
Right. Yeah, this whole Bitcoin treasury thing, while it's great, I'm loving what it's doing for the price, kind of feels like it could be a house of cards or maybe a domino chip away falling that could cause some serious downturn in price like we haven't seen, which makes me wonder, are these treasury-backed firms a sustainable path forward? Or is this just the 2025 version of the ICO craze dressed up in suits?
Yeah, it's the ICO craze. There's no way they're all sustainable. There's no reason for people to hold Bitcoin through a Bitcoin treasury company here in the US. Now, again, like I said, in Japan, where there's different rules and regulations, maybe different countries that have other rules and regulations, China, Brazil, Venezuela, ways that you're trying to avoid triple-digit inflation in some of those countries, and they won't let you hold Bitcoin. This could be an answer to that. But yeah, I see this ending badly for a good swath of the amount of these companies. I mean, you got pharmaceutical companies that are now Bitcoin treasury companies, or even worse, Binance coin treasury companies.
Yeah, we're starting to see the altcoin treasury companies too. I know Ethereum has been certainly popular as of late. You're seeing XRP, BNB coin. So yeah, it'll be interesting to see how this plays out, and I feel like this might end up being another lesson learned for the crypto community over time, but hopefully I'm wrong, and only time will tell us the answer to that one. And MetaPlanet right now, though, they are certainly riding really high, right, as a result of these buys. Their stock is flying, but unless they're unlocking real BTC utility, I mean, we're talking lending, DeFi rails, maybe even Bitcoin native banking, I don't know. Do you think that this all eventually will fizzle out?
So they have a chance to make it because of their status in Japan and how it's hard for Japanese citizens to get access at a retail level to certain, components. So it might not be easy for them to buy MSTR OTC like we could buy their stocks OTC. So this one has a pretty good chance again. And it's a company, I'm okay with some of these companies that actually were either designed specifically to do this at XX1 or that pivoted with an actual plan. Like I said, if you pivoted without a plan and the plan was, hey, everybody else is doing it and they're making money, so I'm going to do it and I'm going to make money, that is the tulip craze getting ready to hit us again. And we don't want to see that.
Yeah, it's interesting times right now because I feel like that's going to happen, but part of me thinks that this will just be, at the end of the day, when we scale back on Bitcoin like we always do and we always should, this could just be another blip on the radar where we take a drawback, we take our licks, learned our lessons, and move forward. Kind of like similar, but definitely dissimilar to the FTX thing. A big bump in the road that sends us back a couple of steps. We lick our wounds, recover, and then it's back to the races. But we'll see how this all plans out. It's certainly worth keeping an eye on right now. Hang tight, Howard. We're going to be right back with you because we got this other story I want to talk with you about. Because as we know, it is 2025 and solo Bitcoin miners are basically the lottery winners of crypto. And this week, one lucky lone wolf hit the jackpot. A solo miner using the Solo CK pool successfully mined block 907283 on Saturday. That single block worth over $372,000. That includes the 3.125 Bitcoin block reward plus about $3,500 in transaction fees from the over 4,000 transactions they jammed into it. Now, for reference, the current price of Bitcoin is hovering around 118K. So yeah, pretty solid payout for someone who was up against a $1 trillion industrial mining complex. The fact that solo miners are still pulling this off in 2025 is really borderline absurd. I mean, the odds, they're worse than Vegas, okay? But somehow it's not impossible. One solo miner managed to score a block back in February and another in early July using only 2.3 petahashes. That's like showing up to a tank battle with a slingshot and then winning anyway. In today's mining landscape, the game is stacked against the little guy. Bitcoin network difficulty is floating around 126 trillion. That's near all-time highs and climbing. The hash rate is through the roof. Corporate mining farms are running night and day, and the block subsidy has already been halved. Still, this miner pulled it off, and that's why it's a story, okay? Meanwhile, even the big dogs are starting to feel the squeeze. Rising difficulty and lower block rewards are cutting into people's profits. Several large mining firms have started pivoting into AI data centers and high-performance computing. Because apparently, when mining gets too competitive, the next logical step is ChatGPT with better air conditioning. Now, the whole industry is operating on some razor-thin margins right now, which is why miners are chasing the cheapest energy they can find, often in places where weather, climate, and power outages determine your uptime. In June, a bunch of miners in Texas had to scale back power usage to avoid getting slammed with peak energy charges. That slowdown even showed up in the block production numbers. Mara reported lower output that month thanks to heat waves messing up their uptime. So yeah, mining ain't easy anymore, but stories like this remind us that the Bitcoin network still occasionally rewards the little guy, even if it's basically crypto Powerball. We're bringing back Howard. Howard, you've said in the past that you love to see solo miners hit blocks. Why do stories like this matter in today's world of mega farms and institutional mining?
Because it's the promise of Bitcoin. This is what it's about, that anybody with a computer has a chance. I keep on getting mad. I look at my Bitcoin heating unit I bought here, and I don't have my block yet. Where is mine? I want to know when I get mine. And what was nice about this is I did point out in a note to you guys earlier and looked it up, and they didn't have anything. A couple of the other earlier blocks that were single blocks, when you really broke it down, some of the Bitcoin mining pools had pointed hash power towards them. This wasn't the case in this one. This was a pure Mega Millions type, you just won the Mega Millions. But it's great for Bitcoin. It's great because it gets people excited, and it shows the little man can win once in a while.
Yeah, everybody loves a good underdog story, and I think this is certainly one of them. Not to mention, right, like it does kind of, it stands as one of those moments that's proof that Bitcoin still honors decentralization, even when the odds are becoming that much harder for those little guys out there. But they're still kicking, and I'm glad to see a score for the underdog for sure. Now, in today's landscape with mining, it's obviously a lot more difficult than it was in the past. We have major miners, in fact, who are pivoting themselves because of this, right, into AI specifically. Do you see the mining game becoming less about Bitcoin and more just about monetizing compute as we go forward, especially with AI, in the mix?
I do see that, and I would say even more so, it's all about energy. So what the Bitcoin miners did is they monopolized all the cheap energy in the US at a time when nobody else was over the last 4 or 5 years. So now, NVIDIA needs a spot to do X, Y, or Z, or, all these data centers need spots and they need energy. We don't have enough for them. So what we're seeing is this run, to try to get that from the Bitcoin mining companies who aren't maybe as profitable, or who ran into trouble because, we had too many Bitcoin mining companies that weren't selling their Bitcoin on a steady schedule to pay their bills. And they ran into trouble. Bitcoin dropped down in price. A lot of them ran into money issues. So this was a solution for them. I'm okay with this. I think it shows to Elizabeth Warren that, Bitcoin mining was actually good for the energy industry, not bad for it.
Amen to that. I don't think she's going to listen to it, though, but yeah.
No, she does not. She could care less.
She's always so angry. I don't know why.
Yeah, she really
is. Good.
Yeah.
Go ahead.
I was just going to say, she is angry and she doesn't know what she's talking about most of the time.
Yeah, this is one of those arenas I think maybe she should take a step back, but she won't. So, fight the good fight, I guess, Elizabeth. I don't know. When we're talking about mining, though, Howard, big picture, should we expect to see more of these David versus Goliath moments going forward, or are we nearing the end of the road for the solo miner dream? Because it feels like these stories are becoming less and less as time goes on.
Funnily, it's actually been more over the last year or so than less. So no, I mean, we've seen 6 or 7 of them over the past year, and I hadn't seen any in a couple of years before that, quite honestly. So it seems, and maybe it's like you said, if someone's timing it right, and you know that West Texas is where most of these places are based in the U.S. If they're having problems and you happen to be mining at that time, you can luck out. But down the road, you have to think that the optimization that Amara has, that Riot, that Hut, that those companies do have gives them just it's an uphill battle. But I love it. I still run my client. And I hope and hope and hope, but I don't think I'll ever get one.
Well, hopefully next time we have you on here, we'll be talking about you and your solo block reward. It almost makes me think that we're talking about some the energy, the uptime that goes down due to weather and whatnot. Do we have solo miners in Texas kind of watching the mining grids, kind of like people watch when someone's at a slot machine, right? And they're watching it go, go, go. They leave the machine, it's warmed up for them. They're like, we should jump in.
Yeah, I mean, hash power, you can see it on chain, right? There is no delay. You can see when that happens, literally to the block. So yeah, you could use it. Yeah. I wouldn't recommend it as a good one. The same way I wouldn't do a 10 team parlay at the casino either.
Right. No, I agree. I used to mine Bitcoin back in the days. Those are long over. I'll leave it to the professionals at this point, and hopefully we're talking about you doing it soon enough. All right, Howard, we're going to take a quick break. When we're back, though, gang, we're going to be rejoined by Howard for our deep dive. We're going to talk about Howard, his background, Quasar markets, all the best stuff. Stay tuned. More Blockchain Report coming back after this. All right, boys and girls, we're back, and we are, of course, joined by Howard Greenberg today for our deep dive. He was kind enough to go over some of the stories with us. Now we're going to talk about what he's up to. Now, Howard, we touched on it a little bit at the beginning of the show. You gave us a little bit about your background, but I want more. You've had a really interesting and unique journey into crypto. So correct me if I'm wrong, but you went from managing liquor sales and barbecue joints to leading blockchain education. How did that evolution happen? I am so curious to know.
So yeah, when I did go to school for computer science, and when I got out, worked briefly in cybersecurity and virus protection. But family business was restaurants and the liquor business. I went into the liquor distribution and wine distribution business and was doing it. And then actually the gentleman who created the virus protection program that I used to help work on, Thunderbite, he got me into Bitcoin and told me about it. And I got extremely excited. Living in DC at the time, started a nonprofit called the American Blockchain and Cryptocurrency Association with a high-ranking official from the U.S. Treasury, who now has left them, works for Cohn Resnick. But Ted and I started it, and we worked on the adoption of blockchain technology and cryptocurrencies at the federal level. So we were very much instrumental in trying to getting the FDA to use blockchain for food tracing. So what used to take about 3.5 weeks to try to figure out what was wrong with maybe the avocados that were making people sick, they can now do that in a matter of seconds. And we work on the education of blockchain and crypto with our politicians, the Clarity Bill, the Genius Bill, everything going on there. We come in, we get them educators, industry experts, and we try to partner them together. We do not lobby for any companies. We actually are agnostic that way. We try to, just promote the industry. And from there, Steve, or Big Beat, is one of my best friends for years, and I asked him to be on the board at ABCA. A couple of years later, Steve decides to start an AI company and really get into financial market trading and everything there, asked me to join him. And what we're trying to do at Quasar Markets is try to teach retail traders to trade like the pros do. Give them the tools, have the ability for them to see on-chain metrics, to look at things like CoinGlass, to look at regular technical analysis and bring experts in to discuss with them what are the things you should be looking at when you are going to invest, not just to blindly go in and buy something.
Yeah. And I remember when we had Steven on here, we talked a little about Quasar, but I would love to hear more about it from you. What exactly makes it different from all the other fintech and AI platforms out there currently? Because I know Quasar has its own secret sauce, and everyone at home would love to learn more about it.
Sure. I think the difference is we are looking to be more like the Amazon of fintech. We don't build it ourselves, so to speak. We take all of the best charting tools from TradingView, the best information from StockTwits, the best earnings information from IARA. We partner with like Robinhood to bring you crypto trading. We partner with TradeStation to bring you equity trading. We partner with AU Secured to be able to do gold and metals trading. And we put them all in one place. Again, trying to follow the ethos really of what is decentralization, blockchain, and really bringing that to all the markets where we're trying to give you all the tools so you can do your own data analysis the same way the institutions do, using the same tools the institutions do. And that way you're not the exit liquidity. We don't bring people in that have positions and are selling them on you. We bring in experts in the markets from all the different fields that are there to share their expertise, people who are trying to give back to sort of the retail traders. So a little different than you see on there. These are real traders. We're bringing on the guys that are actually, that are doing the trading for hedge funds, for family offices. Our Forex expert was JP Morgan's head of digital trading, before he retired. So these are folks that are giving back, to the industry.
I love that. I think I just got your new catchphrase. Don't be exit liquidity. Join Quasar Markets or something. I love that. You guys are really.
That's it. I got to write that one down because it's true. When you see gold, gold advertisements on CNBC, you know what it is? Time to sell your gold. Because they're dumping their thing. When you see Mike, like I said, I was so impressed that Mike Novogratz came in before they sold that Bitcoin for that whale and said Ethereum is going to outperform Bitcoin in the near term.
Right.
And then he went and helped dump a couple of $1 billion in Bitcoin for a client. That's what we want to hear. We don't want to hear, you need to get into the latest meme coin as they're the VC behind the meme coin that's getting ready to dump it.
Exactly. And Quasar has proved that it is no passing fad at all. I mean, you guys just won Best AI Research Platform for the second year in a row. What does that award actually reflect about the product itself right now and where you guys are at?
It shows, again, what we've done is our secret sauce is the user interface. Steve and the team have put together just an amazingly easy platform to use. And what we've done also is, unlike where I had problems with platforms in the past, and where I think we did a great job, is you set it up for your own eyes. So we don't say, here's the screen and this is how it's set. You can move it around. It's all Web3 based. So you slide, you want your chart in the top left, you put your chart in the top left. You want your trading screen in the bottom right, it's in the bottom right. You want your news in the top right, it's in the top right. Wherever you want to see your stuff, it's able to pick and choose and put it there in one place. And, in the old days, I used to have 7 screens that took me hours to set up. Now I'm able to do that very quickly by hitting one app, and it loads my 7 screens up for me.
Oh, that's amazing. Well, it seems like you guys are really tackling one of the biggest problems, and we kind of touched upon it earlier today. It's the user interface. And how do we make that more accessible to people on a broader basis so they can get into crypto, Bitcoin, get that information they need at a moment's notice? And you guys are certainly doing a great job of taking us there. And you yourself have a really interesting kind of front row seat to this intersection that we're seeing between traditional finance and DeFi. Do you feel like they're on a collision course, or is this a path of convergence that we're seeing coming up here? What way is this headed right now?
I'd say both. For the crypto companies, it's a convergence. And for TradFi companies, it is. But they're going to run into that tsunami I talk about. Is you can see how quickly they're pivoting, right? Companies that said, I'll never touch that, how quickly they're now saying, not only am I building it out, but here you go, let's start. Because, TradFi realizes, why would you pay the bank when you can be the bank? I want to be the liquidity that people borrow. I want to provide that. I don't want to pay somebody else trading fees. I want somebody to pay me the trading fees. And that's what you get as an automated market maker on Uniswap. I want to lend out my Bitcoin. So that's where Aave comes in. And these things are already, whether you like the president or not, follow what's going on there with DJT. What they're building out is trying to very much, and people are realizing, If JP Morgan and these banks don't get on board, they're going to get surpassed by the MicroStrategy. That will be the next bank. That will be the answer.
Mm-hmm. And during your time as you're building Quasar markets, what kind of investors or users are you finding are most attracted to Quasar? Is it retail, institutional, maybe somewhere in between?
So that's where the disconnect a little bit is. We're seeing more institutional and professional traders that are using the platform when I want it to be more retail. Yeah, because they get it. They're like, this is easy. This is great. I get all my data in one place. I don't have to pay for a Bloomberg terminal, but I get almost all the same information right here in front of me. So a lot of the people I'm dealing with and a lot of the questions that then get asked are very advanced questions, because it isn't, where the dream is that the retail traders will use that way. What we're seeing is it's folks that are professionals that are using it.
That's interesting. I almost feel like that's a point of validation for you guys, though, right? Like, it's like if the top people that are using it, your stuff must be pretty darn good, right? Like, in the same way, like Bitcoin, if institutions are buying Bitcoin, it's almost surprising to me that more people are like, oh, maybe this is here to stay, because you have BlackRock having like over 700,000 Bitcoin or whatever. You would think that kind of validates your product a little bit. Do you feel like there's any truth to that? Do you feel like the fact that you're seeing more institutions and bigger players use Quasar markets is like, I think we're on the right track?
Absolutely. Absolutely. It might not be the vision that we wanted, but we'll gladly have them be part of the ecosystem, and they provide value to us in the ecosystem because they ask for more functionality. They ask for different things that maybe aren't already built in. So they're the ones that are being our sort of product testers and helping us build out the next level of Quasar markets. What we find is the retail traders more watch the show in the morning and gather that. And I guess that would be the difference I'd ask you. Retail doesn't seem to still want to do its own research. And it's something in crypto that we say DYOR, right? You have to do your own research. We're trying to give you the tools to do it. Don't follow someone on Twitter that tells you to buy X, because again, what are they? You're their exit liquidity.
Yeah, and we've seen time and again, anybody who does their own research in the Bitcoin space always ends up coming to the same conclusion, and that's Bitcoin is the way, the truth, the light. I mean, Michael Saylor did it. We're in the midst of Peter Schiff slowly getting orange-pilled himself, so we're really thankful we got people like you out there providing the education and the tools for this next generation of orange pillars out there, because it's going to be a wild ride, but I feel a lot safer with you guys over at Quasar showing us the way with all that great info. Now, I know you got to get out of here, Howard. Before we let you go, though, are there any final thoughts about Quasar you want to communicate? And for our audience out there that's interested in checking out Quasar markets and all of the amazing tools that you provide traders, what would be the best place for them to go check out and learn more?
Absolutely. You can watch us every morning, at our Twitter feed, quasarmarketslive.com, or quasarmarkets.com, excuse me. Our YouTube is quasarmarketslive.com. But go to quasarmarkets.com. It's got a free sign up. We've got a free newsletter that we give out. It's got like 65,000 subscribers already. We get seen by about 8,000 to 10,000 people a morning. Get started with the free stuff. See what you think about it. Hit us up. Let us know if you like it or don't like it. But I'm going to tell you, it's going to improve your ability to trade. It's going to give you all of the tools, like I said, that the professionals are using out there. Over 100 different apps built into it.
Well, that's amazing, Howard. And we certainly appreciate you and your time this morning. It was a blast getting to tap into your wealth of knowledge and expertise as a Bitcoiner OG, I think from like 2013 or so. So you've certainly seen the markets move and shake over the years, and your knowledge and expertise in this is greatly appreciated. So thank you so much for coming on the show. We hope to have you back another time. And anytime Quasar has a new feature they want to talk about, please come back on the show. We'd love to chat with you more about it.
Absolutely. I love it. You guys are doing a great job here. Good for the industry.
Appreciate that, Howard. All right. Thank you. We certainly appreciate you and your time and your compliments there, Howard. We'll catch you again soon. To the rest of you, that is it for today's Blockchain Report. As always, make sure to like, follow, and subscribe to RoxomTV and me and Hank at RoxomTV. And we'll see you all Tuesday for more Bitcoin Bedlam. Sayonara.